Hey everyone, welcome back to Corporate Decoder, the place where we unpack the fine print so you don't have to. Today we are looking at Black Hills Corporation, and let me tell you, they've been busy arranging some big money deals. Get ready to dive into how Black Hills Corporation is shaping its financial future through some significant agreements. We will break down exactly what this means for the company and its investors. And before we dive in, if you love getting these kinds of breakdowns without any corporate jargon, make sure you are subscribed. We also have a super active Discord community linked in the description, so come join the conversation. Alright, so Black Hills Corporation, a company many of you might know for its role in energy and utilities, has just filed a report detailing a pretty important financial move. They've essentially taken out a big loan, or at least arranged to sell some very large notes to fund their operations and future projects. This particular filing centers around an agreement where the company is selling $450 million worth of notes. Think of these notes like iOS that investors buy today, and the company promises to pay them back later with interest. It is a common way for big companies to raise a lot of cash quickly for things like building new power plants, upgrading infrastructure, or even buying other companies. These specific notes are set to mature in 2031, meaning that is when the company needs to pay back the principal amount to the investors. The interest rate they are offering is 4.550%, which gives you an idea of how much they are paying to borrow this money. Now, the actual amount they received after accounting for some fees and discounts is about $447 million. So, while it is a $450 million offering, there are always little costs involved in these big transactions. The actual exchange of these notes for cash is planned for early October. The agreement itself is what is called an underwriting agreement. This is a standard document in the financial world. It basically means there are banks, known as underwriters, who help the company sell these notes to the public. They take on some of the risk and ensure the sale goes smoothly. The contract lays out all the promises and guarantees between Black Hills and these underwriters, and it sounds pretty standard for this type of deal. It is basically a handshake agreement on a very official scale, with legal terms to back it up. To make this all happen, they referenced a previous registration statement, which is like a big official filing with the Securities and Exchange Commission, or the SEC for short. This statement allows them to legally sell these kinds of financial products, like these notes, to investors. It just means everything is being done by the book, which is crucial when you are dealing with that much money. Now, while this report is all about selling these new notes, it is worth remembering what Black Hills Corporation is fundamentally. They are a publicly traded company, and their stock, the common stock of $1 par value you see listed here, is traded on the New York Stock Exchange under the ticker symbol BKH. This means that how well they manage their finances, like taking on this new debt, can definitely impact the value of their stock for everyday investors. The filing also includes a list of exhibits, which are like attached documents that support the main report. In this case, the most important one is the actual underwriting agreement itself, filed as Exhibit 1.1. This is where all the nitty-gritty details of that loan agreement are laid out. They also included an interactive data file, which helps make their financial information more accessible. And finally, the report is signed off by Kimberly F. Nooney, who holds a pretty significant title, Senior Vice President and Chief Financial Officer. This tells us that this financial transaction has been reviewed and approved at the highest levels of the company. The date on the signature is the 29th of September 2025, which is just a few days after the agreement was actually made, showing they are on top of their filings. So, what is my take on all of this? Black Hills Corporation is clearly in a growth phase, raising a substantial amount of capital through issuing debt. This $450 million infusion of cash is likely earmarked for significant investments, perhaps in renewable energy projects, infrastructure upgrades, or to diversify their operations. The 4.550% interest rate is not excessively high in the current economic climate, suggesting they secured reasonably favourable terms. However, taking on this much debt does increase the company's financial leverage and consequently its risk profile. Investors will be watching closely to see how effectively this capital is deployed to generate returns that exceed the cost of this debt. The company's long-term strategy hinges on its ability to turn this borrowed money into increased profits and value, which is always the balance companies must strike. Grow big, but do not grow so big that you become too risky to manage. The key takeaway is that Black Hills is making a bold move to finance its future expansion, and the success of this venture will be a major story to follow for this company. Alright, that's our decode of Black Hills Corporation's latest move. What do you think about this debt financing strategy? Does it signal strength or a potential risk? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button, subscribe for more corporate deep dives, and don't forget to join our Discord community for more exclusive content and discussions. Thanks for watching, and he'll see you in the next one.